Hi, this is Kim Watson from Easy Trader doing a review of what may be in store for the month of September. Okay, so let's look at the key events and starting off looking at the geopolitical issues. We've still got the situation with Russia and the Ukraine. Sanctions have been increased and are likely to be increased further. The whole situation there is obviously affecting and may affect the euro even further. Just even small comments coming out giving 20-30 pip swings in the euro. Middle East, still obviously a situation there has escalated in some places and is not looking good at all. And basically the world in currencies likes harmony. When there is conflict like this, it really feeds the US dollar effectively because it becomes the currency of safety. We've got a lesser concern, but still of a concern to currencies. We've got the Scotland referendum, which is having an effect and may have a more significant effect as we move forward, which I'll discuss shortly. From an economic point of view, I'm going to look at a map and just run through a map here of what's going on, where the hotspots are and where they're not, within a very rough basis. Now you'll have to excuse my drawing tool, dodgy old pen. Looking at the key, obviously the drivers of the world's economy is still really US, and of course I don't think we should miss out China by any means. But aside of this, God, there's a little country there, Germany. But aside of this, these are two main currencies and economies which often drive others. So in one way or another, China sitting there relatively flat but steady, a positive growth running through manufacturing, non-manufacturing. In fact, non-manufacturing increasing marginally. So the figure's looking relatively good for China, and I say relatively, not as good as obviously they had been, but it's still positive. But when you look across towards Australia, you've got an interest rate sitting there currently at 2.5, and that's most likely going to be sticking, as they've suggested, and they're possible with unemployment rising to 6.4. We could see that even drop further. One thing to bear in mind, the reason I'm talking about the interest rates here is purely in the fact of the potential for carry trades and the flows of money as we run through the economies. Now, Australia's economy is relatively sound. The unemployment figures are rising, so it does weaken the whole picture a little bit, and as I say, there is potential this could come down even further. In fact, Australia's interest rate is lower than what it was in 2008-2009 time, when interest rates fell to just 3% actually in Australia, but have risen up as far as 4.75 cents and is now back down to 2.5, which is why I say back to below where it was. So it's interesting how interest rates have changed there. I shouldn't ignore New Zealand. It's one of the major currencies still, and an interest rate there sitting at 3.5% with a lower level of unemployment. So it's a small economy, but unemployment sitting there at 5.6%. And sitting quite stable from the numbers I'm seeing. So what we got over here effectively are two currencies which could benefit from the weakness and the unstable conditions in the likes of Europe, the UK, and we could see, instead of the carry the carry may change as well. What was the carry, if I can find Japan sitting there. There it is. Sorry, Japan. There we go. Japan was the real currency for the carry in terms of people sold the Japanese yen and bought the dollar or whatever else they were, wherever the interest rates, particularly the Canadian currency was bought a lot from. But although a lot of those carries were unwound as interest rates changed, and in fact. More recently, the US dollar has been used as a carry with the low interest rate of just 0.25, but with the interest rates changing in just pop that on there, to 0.05 for the euro here. We could see the euro used as the new carry. In other words, this could have an effect on the euro current, the single currency, and reduce its value as it's sold, with the likes of the Kiwi and the Aussie benefiting a little bit. And maybe the dollar as well, although the interest rate differentials are not so good. The carry's better and safer, and the economy's over here. So the carries, certainly we could see both the New Zealand dollar and the Aussie picking up slightly on that basis. So they have positive risk, if you like, whereas we've got negative risk in euro, on the euro, and negative risk in the UK. Looking at briefly at the US, just sort of following through there, unemployment sitting at 6.2, and it has been rising slightly, so it's slowed things down in terms of some of the thoughts of starting to increase interest rates, base rates. Also, I think they've taken a bit of a dovish approach, but we'll see how things roll out there. But there is growth in other sectors, and GDP 4.2%, somewhere around that level. So there were suggestions by Yellen that they may take their eye off of unemployment. They may not wait until that sort of really gets down to the sort of levels they were even looking at changing it to being, and start increasing rates sooner rather than later. So there is the potential for that. So for me, the dollar sort of is certainly increasing in strength, not only pure literally, but the potential is better. Crossing across, as I look across back to the yen, which is as I say, was one of the candidates for the carry. I mean, it may still come back to that being at it has a negative 1.7 GDP. Unemployment is 3.8%, so it's relatively very, very low still. But inflation is running at 3.3, so this sort of they're not going to be cutting rates anytime soon, and it looks like the yen could weaken some more, and we'll look at it technically in a short while. Looking then at the UK, interest rate obviously 0.5. That's a potential that it could be increased at some point. Now there's manufacturing figures are coming down slightly. We sort of manufacturing PMI went 57, 55, 52. So there's a slight slow up, or certainly a slow up in the growth factor there. And whereas services are slightly increasing, 57, 55, 60. So we've got the services do account for a bigger ratio for the UK. Unemployment, it's a bit varied. It's been falling gradually, so that's been one of the key figures, dropping down to 6.4. And inflation, we've been as high as 1.9, dropped back down to 1.6 last time, but there is more chance that things could increase here. But of course, I've mentioned this situation with Scotland, which could see things and will affect things as we run through the market months. I'll look at that when I look at the technicals more so. Okay, and then we've got the euro situation now. The problem with Europe rather, in terms of looking at it as a whole, is really there's two major parts there: the German economy, the French economy, the two largest there in the euro currency. And I'm really looking at the sort of figures there, and Germany is seeing a decline, seeing unemployment increase. Overall, euro unemployment sits at 11.5, so it's very high unemployment, but a lot of that's into countries such as Spain, Italy, Greece. Unemployment's better in Germany and France, but these high unemployment numbers don't help things, and with the situation with the Ukraine and Russia, we've got the potential of further slowdown there, so and it could have a knock-on effect to the euro more. Okay, that's just about it. Oh, I won't forget Canada, sitting over there, that big lump there. Don't mean that in the wrong way, of course. Unemployment sitting at 7%. It's been sitting there quite flat. Inflation is really in negative territory, at minus 0.1. And the monthly GDP just up a little bit, but it's probably not the strongest. As I say, to me, if you're looking for the carry, I'd be looking over this sector and over this area. Whilst the Canadian dollar may come out okay, I think the US dollar is going to do better. But let's move on and look at the currencies. Let's look at the charts, and we'll start looking at the US dollar first. I mean, what I'm looking at here is potentially further strength. I'll just bring the chart into play. There we go. And what you can see, I mean, this is a daily chart today with the euro giving up so much, but also the pound also weakening. We've seen the dollar benefit significantly, well away from its monthly pivot at the moment. I'm going to just take those off. Let's move this across and hide that for a moment, because I want to really look at the weeklies and give us a better idea of the potential and where we sort of stand here. Actually, let's look at the monthly first. And as you see here, we're sort of pushing back up, and we could easily push I mean towards that 84.5, that sort of area up here, and that's what I was really looking for the weeklies for. A break of those sort of areas, and we could be running all the way back to that sort of 88 area which we saw in 2009, well, late 2008, 2009, and then 2010. So it could easily push back towards that sort of area. From a weekly point of view, as they really is the 84.5 area I'm looking for, where it could be pushing up this month. This is okay, it's only first week in, and so we could easily get up to that level and possibly pass it. Okay, let's look at the euro then. So we got the further weakness with Russian sanctions, and most likely the rate effect of the financial easing. It could be quite slow in some of the things that they've already done, and this is one of the worries they have in terms of doing this sort of thing, is it does take some time. Personally, I think they should have just done it in one chunk previously when they did it in June. But there you go. Anyway, they're quite modest and conservative with their changes. Now, so I'm looking here at the potential for the 125, 122 area. Let's just bring the euro into play. Okay, and in fact, let's just start off with a monthly basis first here. Now we have got I'll come on to that in a moment, the pivots above, but the monthly pivot. But the way things are moving at the moment is looking particularly weak. You can see from this monthly point of view, we've been selling off quite strongly. Could find some support on these prior lows here, around about 128.07, and thereafter we could be right down to, I mean, I mentioned 125 area down here. We could actually run right away back to the 122 area I was looking at. That's certainly the possible sort of scenarios. With sort of resistance coming in now back into the monthly pivots. Let's just come down to a weekly chart here. And I mean, we've seen quite a sell-off this week. It's been coming off for a few weeks here. Possibly a little bit overstretched, but and a bit oversold potentially on a weekly. But when things are going as they are, we know that this can become oversold for a bit of time, and it may just slow down a little bit. But certainly we could see a continuation of this move downwards, and it really depends on how many things go. Of course, the possible upside movers is a solution with Ukraine and Russia. May give some boost. But in the main, it's looking particularly weak. If I just bring it back to the dailies, and let's just pop the pivots on there, and we're getting quite extended away from the monthly pivot itself now. But generally, the moves can be contained. So 127 would be possible, an area of where it could be contained into in the short term. But it may just run beyond that. If we get a run on the euro, as I say, looking very weak, even on dailies here, very oversold, but it's been pretty oversold for the last part of August. Okay, that's the euro. Next situation. Next, let's have a quick look at the UK pound. Okay, so I've got week and the risk to the downside until the 18th, 19th. Obviously, you've got the elections on the 18th. Results, I assume, will be out by the 19th. So we could see further downside, and I think the trend is slightly down. The risk is to the downside with the pound. That's not to say intraday we can't trade it long. It's just that there's lots of risk there. In fact, 1.6 could be on the card. So let's just bring the pound into play. And as you can see, it's daily chart. We sold off. It got quite close to the pivot. One stage thought it might have actually run up to that monthly pivot, but it has sold off. And well, some key support areas. Well, as I've mentioned, 1.6. There could be a bit of. I mean, if we carry on heading down as we are in the way we're doing, and with the news that's sort of coming out and the potential weakness, we could easily run back to that 1.6 and break through the S3 areas. Okay, let's just remove the monthly pivot for a moment and look at it from a weekly point of view, because I'm looking at some potential support sitting below us at the 160.85 area, or the 1.6 area is obviously worth mentioned there. But we have actually, monthly support. We've got the 21 moving average, which has not come up on this chart here, which is below us, which may provide a bit of support. Let me just pop that on. There we go. Just pop that on there. Actually, it's within a hair's breadth of the with that monthly 21 now. So it may provide a bit of support in the short term. But you can easily see how it could easily run through. It's not a massive correction that we're looking at here with these moves. Of this move from the lows there, and I mean it's closing on at 38%, so 50% retrace would bring it down to 160 at the 1.6 area. So certainly a possibility there. Okay, let's look at next Aussie dollar. Now reliant on China, so obviously the news refers to that. I'm erring towards the upside on this, possibly, as I mentioned a short while ago, because of the possibilities with it being a carry, a relatively safer carry than some. So there we're sitting at the moment. Let's look at the dailies. It's from a daily perspective. This afternoon or this morning we just managed to break the private highs there. If we can close above this daily 50, there is the potential. We're putting the classic higher lows in there, higher highs, so we're running in the right direction at the moment. It's one that's been pretty range bound. We've been seeing it between the 9.2.5, 9.4 area for quite some time. I mean, it tends to sit this way, but there, as I say, we could see flows of money working towards the Aussie dollar. And for those people that are trading the cross pairs, I mean, the Aussie dollar could, from that point of view, the euro Oz could be a reasonable currency to be trading and carrying. Okay, from a weekly point of view, what we got here, and you can see from a weekly point of view how consolidated it really is in this point of view, and there is the potential to push out of this weekly sort of levels up towards the 100 MA and maybe even towards the 200. So certainly the possibility for shove upwards. As I say, it may just be stronger. I mean, I'm looking at this as against the US dollar. It may actually be a better play against the euro. Okay, looking next then at the Canadian dollar. Well, actually, I'm not going to look at it because Charlie's was interviewed on it, and the interview is sitting on our site. Let me just. So if you just click on our site, go to daily videos here, and then scroll down, you'll find it, the Duca's Copy TV interview, and that's Charlie's review of the Canadian dollar. So have a look at that. Okay, that's that done. God, that was quick. Okay, dollar yen then. Now the yen is a little bit likely to continue in its upward trend. Let's look at it from a daily point of view very quickly. and as you see, it's been pushing up pretty strong. It's broken out of the prior levels late in August, pushed up, consolidated, pushed up. I mean, it's not unusual for it to get into these consolidated phases with the dollar yen. Could run on some more, but the way it's running at the moment is looking pretty good for some further upside. Looking at the weeklies, we're just running literally into the prior highs there. If there's no significant sell-off here, I mean, we could just be selling off for a day or so. But if that gets surpassed, well, then really I'm looking at that 110 area potentially. And if I come onto the monthly point of view, you see, I mean, we've got some resistance sitting there at 106.48, but we could easily run towards 108, 110 without any problem. I mean, even back in 2008, we were sort of in those sort of levels. Could easily run back towards those areas. The Japanese economy remains relatively weak-ish. Okay, that I think summarizes the my review of September. Hope you have a great one, and let's look forward to some good trading. Bye for now.